Hello, hello everyone. Please let me know if you can hear my voice. Let me know if you can hear my voice. Mm, good evening, good evening. Okay. Yeah. Okay, good evening. Abasi Freke, good evening. Okay, so let me know where you are from, your name and where you are from, okay? Just real quick. Okay, so just your name and where. Yeah. Hopefully, by God's grace, we will. Yeah, you just your name and where you are. Yeah. Okay, I can see. I can see Mr. Freke from Calabar. Okay, so I'll just go over to. I'll go over to the group to let everyone know that we're live already. Moses from Nigeria. Nice to meet you, Moses. Nice to meet you. Abshir from Somalia. Yeah, that's my very good friend. Nice to have you here, Abshir. I hope you guys have questions for me. I hope you have questions for me. And I'm going to be looking at my I'll be looking at my comment sessions because it's supposed to be interactive. Okay. Yeah. Thank you. It's supposed to be interactive. So I will I will I'll be looking at yeah. Thank you. I'll be looking at the comment sessions, okay? So okay. Okay, so yeah, just tell me what things you expect me to talk about, right? Whether they are personal, whether they are, but of course within trading. Okay, so just take your questions. I will just share a couple of things with us, but largely I want us to look at questions that are bothering you as traders. What you think is stopping you from actually being the trader that you hope to be. I hope you're all with me. You can hear me. Yeah. Thank you. Okay, let me know the entry confirmation for the London breakout strategy. Okay, more on psychology. Okay. Okay. Okay, I'll take them as they come. I will take the questions as they come. Okay, the entry confirmation for London breakout strategy. In the last time we met, I told you about the details of how you can find the you know how you can know where the strength lies and capitalize on it, right? So that was what we touched, the last time, right? So um before that one, we already talked about the strategy itself, okay? And I'm going to show you something that might interest you, okay? Especially those of you who are looking to pass prop firms, scale up your trading account, and become better traders. Okay, somebody said fundamentals trading. Okay, so those of you who are looking to scale up and be better traders, right? uh you need to, because oftentimes, I did a question. I asked a question on my Instagram, and I carefully went through all the responses to the question. It was, where would you like to be in 12 months from now as a trader, right? And what are you going to do about it? What are you doing? Okay, some people say they want to be in Dubai. Some people say they want to be here. I just got so many different answers, right? So, but the question is, what are you doing to be the trader that you want to be? Right? Where do you see yourself seated? How do you hope to get to that point? Right? And then, if you're hoping to get funded, I mean, because why I'm saying this, the guys, most of them were saying they want to get funded. They need capital. They want to get funded. They need capital. And I I responded that, I mean, it's not about capital. You have to be profitable on paper first. You have to be we have to see your statistical profitability on paper before you go for a prop firm. I always advise, anybody who is trying to get a prop firm, that, I mean, is you're just dashing them money, right? You're just dashing them money, because it won't work. If you're not yet profitable on paper, it will not work, right? It will not work. You will just keep donating money to them. Okay, so my advice is, I mean, first develop a playbook, right? I talk about this playbook so many times, and I don't know if you will really really understand what I'm saying, right? You need a playbook. A playbook is your attack strategy. You need to define your edge before you look for capital. You need to have been profitable on paper before you look for capital. This is very, very, very important. It is very, very, very important. I don't know how else, to say it, to make it clear. But man, if I cannot see that you are making money on paper without if I can see that you're making money on the statistics, right? Then there's no way you can get more capital. It's as simple as that. If you're being honest with yourself, imagine that somebody comes to you and says, I need money, right? I need money for a business. And you ask the person, okay, let me see your profitability, or your I mean, you would surely say, okay, what do you want to do with the money? Let me see how you are already performing where you are with, with the little that you have. How well are you performing? Okay, so I've really been distracted because I was trying to ensure that everyone is aware. Okay, so how well are you on paper money? How well are you doing on demo, right? If you cannot take the FTMO trial and pass, I bet you there's no way you're going to pass any prop firm. I'm telling you categorically, if you cannot take the FTMO trial and pass 2 times, 3 times, and pass, it means you're not ready for any prop firm. I'm going to say it again. If you can't take the FTMO trial, free trial, I don't care what account size, just follow the criteria and pass. If you cannot take it and pass it, then you will never ever be able to pass any prop firm, except you're banking on luck, and you're feeling like, okay, you will run out of luck, right? You're feeling like you're going to run out of luck. It means that you have not established your edge. Yeah, Bezalel, thank you. Right, so the first thing you have to do is to establish your edge, to know what your strength is, right? And I talk about this several times. Okay, traders have to first, before any other thing, right? You must find your playbook, right? You must find your playbook. What is a playbook? A playbook is your setup. And I talk about, practicing one kick 1,000 times. It is important. This is, of course, before you come up with this setup, you need to have, experimented with. You must experiment, right? It's like looking at different musical instruments and then choosing one, right? It's like you're looking at you know different. You get the point. Like it's like a child who is in who is taking different sports, right? You take different sports, but as you grow up, as you get to secondary, university, as you grow up, you will fall in love with one of the sports and you will remain there, right? So you have to experiment with different setups and different markets. Then you will now narrow your focus down to one particular setup. Now, before you would say, "Oh, I'm not good at basketball, or I'm not good at tennis, or I'm not good at maybe rugby, right? Or I'm not good at football." You have played it and seen your results. You see it. So you can't correct something that you have not measured, right? You have to first measure it. And what I'm talking about here is very simple. I'm talking about taking record. You need a catalog. You need a catalog, right? Okay, I think I'll attend to that later. Okay, so you need a catalog. In this catalog, what are you doing? You're looking at the setup, right? You're looking at the setup. What are the data? You're looking at the win rate, right? You're looking at win rate. You're looking at okay, I think I have to adjust my image a little bit. Or I'll just come down here. Okay, so under the catalog, right? you're looking at your win rate. You're looking at your risk to reward, right? You're looking at I'm going to show you something with the London session strategy so that you will understand why these numbers are important. Okay, you're looking at how many trades, right? How many trades will you get in 1 month? How many times did the setup occur in a month? Right? You're looking at what else? You know, you're looking at I talked about risk to reward. Of course, your risk, okay? Your risk, right? And I mean, and what you get. And then away from all of this, you're looking at how you're thinking, right? How you're thinking when you're taking the trades, when you are, you know, during the trades, because traders have to measure what we call compliance, right? I can have a setup that has an edge of 30%, but the trader's non-compliance to that setup will reduce the edge to maybe 10% or 5% or 12% or 20%, right? Because he's not complying to the criteria of the strategy, right? So now, even if you're not too keen on looking at compliance at this point, right, at the point where you are trying to figure out your setups, right, you're going to see from these numbers, this is what I call statistics, right? From these numbers, you will begin to see whether that strategy has an edge in the market. You begin to see firsthand whether there is an edge in it. And then once you start to see Isaac, who's this? Redeemer is asking if we can get the ebook sent on the Telegram channel. I don't have the ebook. I don't have the ebook, but I think it's downloadable. It's downloadable. Or you can buy from Amazon. Right? So you see what I'm saying, what I want you to understand, if this is the only thing you're taking home, I want you to understand clearly that if you have not put your setup through at least 25 samples, right? 25 samples, you have no right. I said at least, okay, at least doesn't mean it's supposed to be only 25 samples. Of course, if you're backtesting, you want to backtest as many as possible. If you can get to 200, 300, you know, take plenty so that you have enough number to be able to tell yourself, okay, I believe by taking 25 samples, 300 or 100 or 200, I must have passed through different market conditions. And then that would tell you, okay, I'm talking about back testing now. But in real time, you can take 25 to 50 samples. And then it is from this, when I say real time, I'm talking going forward now. You're opening and waiting for the setup and taking the trade. This is the point where you will now really know whether or not that strategy has an edge. Until you have done this thing, you have no business looking for capital. Until you have done this one I just said now, until you have done it, you have no business looking for capital. You don't know what you are doing yet. You're just guessing, and you think you know, but you don't know. There is no professional. You want to be a professional trader. This is what I'm telling you here is what professional. I'm talking about elites. I'm talking about like world-class traders. This is what they do. Once you come into the institution, first they teach you all the different concepts. After teaching you all the different concepts, they will now tell you, okay, take different strategies, different setups, right? Different strategies, different setup, and then from that point, you can begin to know
you can begin to test the statistics, test the numbers. All right, you're looking at what is the risk to reward, what reward are you getting, how much do you have to risk to make money, what is the win rate, how many times is this thing happening in the space of 1 month. This is that's a question you should be asking. How many times is it happening? What is the because some people can have a setup and you only find the setup like 3 times in a week. Some people can have setups, you only find the setup like 3 times in a month. They're waiting. Right? So you need to know if your setup is appearing 3 times in a month, then you have to know that, okay, because my setup is appearing 3 times in a month, I have to risk X amount, maybe 2%. So that if I take the 3 trades, hopefully, for your setup to appear only 3 times in a month, it means that it has to be a very good setup that will give you money, right? Let's say you win 2 out of 3, right? You win 2 out of 3, you get 4% profit because, or depending on your risk to reward, right? Your risk to reward, that's another thing. If you're risking, so you have to look at these numbers. That's what I'm trying to say. You have to look at these numbers so that you know beforehand. If FTMO says finish, because the goal here is to make money, and I am an advocate for getting funded. I'm funded over $1 million, right? And then what I'm telling you here is exactly what I had to pass through. And then I take prop firms from one prop firm to another, from one prop firm to another. I'm taking them gradually and I'm growing them. I'm scaling up, right? And then I was telling somebody the other day that you don't open the prop firm and go and buy $100,000. You have been trading $100 and $50 and $500, and then all of a sudden you went to buy $100,000. You're going to lose it, right? Because you're not prepared for it. And then why are you doing $100,000 when you can do 5K in 5 places and scale up? You are not supposed to give your own pocket money, your hard-earned money, to someone else. Right? You're not supposed. So somebody is saying, won't it be confusing learning more than one strategy? Yeah. No, what I'm saying is, okay, I'm going to come back to this question again, right? Let me finish up with what I'm saying now, right? But that's an important question. I'll come back to it, right? So what I'm saying here is, if you have, instead of taking a 100K account, right, you take 5K into, let's say, 10 places, or 10 might be too much. Let's say 4 places. 5K account for 4 places is usually around $50. So into 4, that's $200, right? $200 for 4 5K accounts. If you take the first, of course, you're not trading all of them at the same time. You take the first 5K. By the time you take the first 5K and you pass it, right? Even if you fail, let's assume you fail the first one, you fail the second one, then you pass the third one, right? When you pass the third one, you get 10% of this money. That's $500. If you get 10% profit at the end of the day, that's $500. That's 10%, right? Now, 10%, which is $500, already covers the $200 that you invested. And now you have extra $300, and you have an extra 5K account. So if you take the 4th 5K account, by this time you would have known, of course, if you have been following this method, right, you would have known what works. If you make another 10%, that's $500. You have made $1,000 with an investment of $200. That is intelligence. It's intelligence. This $1,000 now, you can use it to buy 4 $10,000 account. You can buy 4 $10,000 account, and then you can scale up. Right? You can scale up. What I mean by scaling up is from this point, you can if you buy four 10K accounts, if each of them cost $100, you have a profit of $600. You have a profit of $600 if each of them cost $100. And I know there are some prop firms that cost less, 89 or thereabout. I think my forex fund or my funded forex, something like that, one of them is $89 for the 10K account, right? So now what I'm saying here is you have a $600 which is yours, and then you have 10K accounts in 4 places. Before you finish the 4 of them, if you're getting 10% as your profit on each of them, right, you're looking at, even if you fail one of them, right, and pass the other 3, that's $3,000. $3,000, right? From here, you can begin to look to buy 50K accounts. So when you look at what I'm saying, right? When you look at what I'm saying, you will see that it is very, very possible. It is very, very possible for traders to scale up from the trial phase, from the demo phase, right? Start with demo, start with the free FTMO trials, begin to scale up everything. When you pass that, okay, I'm giving the giveaway, right, for those who have the best result out of the FTMO trial, right, for the month. Now, if you are good enough and you pass the FTMO trial, you get at least a 5K account. And I believe that the person who is going to come out top to receive this 5K account has what it takes to maintain it and make money. I always say that capital is not the problem. Capital to trade is not the problem. Traders make it look like their problem is capital. Your problem is not capital. You have not learned how to trade. You have not discovered your edge in the market. And if you doubt me, show me the numbers. Show me the statistics. Don't just open your mouth and say, sir, I promise you I will not throw the money away. Sir, I promise you I'm going to manage. Where is the number? Where are the numbers? Where is the guarantee that, or what tells us that really you are a profitable trader and you're going to make money if this account is given to you to manage? There's no guarantee. There is no guarantee. So if I give you that account, you will throw it away. You throw it away. And then traders continue to buy prop firms and they are funding other traders that know what they are doing. That your prop firm that you lost, the money was given to another person that knows what he's doing, that has discovered his edge in the market. That's what happened. And of course, the prop firm, they keep the rest. They use it to buy their Lambo. Right? So what I'm saying is as simple as it sounds, right? It is something that you really have to do. It's something that is explicitly important. I'm going to take you a step further, okay, before I come back to the question. Well, let me just read the question now. The question he has, yeah, numbers don't lie. True, right? So he said that, but sir, won't it be confusing learning more than one strategy? Now, I'm going to put it to you first that for you to become profitable as a trader, you cannot spend anything less than 8 months. Anybody who tells you anything less than that is lying to you. The average time is 8 to 18 months. That's the average time. I'm talking professional trading. In your first year, you might not make money. And some people have gone 5 years without making money because they are doing the same thing over. And I don't know. I don't know how you people see it, but is it possible for somebody to go for an Olympics without having a coach or a mentor? It's not possible. I don't know how I'm going to say this. You need a mentor. You need a mentor. Look at the statistics I'm talking about. It is only those that have a mentor that will be able to follow this judiciously and get their the mentor to look at the statistics and then tell them what the problem is and then fix the problem. That's the job of your mentor. If a trader, if you want to be a professional athlete, you need a coach. If you want to be a professional trader, you need a coach. If you don't get a coach, you are just wasting your time. I'm telling you, I paid $4,000 to get trained by a mentor. $4,000. And I know today, I mean, even if you tell somebody to pay $100 or $500, they look like, I mean, it's like too much. And then they're looking for money to fund a prop firm. And they are not going to pass it. So if you jump the gun, if you don't have the knowledge, if you pick up any prop firm, you will throw it away. Right? Any prop firm you take, you will throw it away because you have not done the basic thing that you need to do. Let me show you something that will interest you. Okay, the person who is talking about if strategy is a problem. Strategy is not a problem. What I'm saying is, of course, you have to master one setup. If you see my what I always post, right, is one setup. I'm a one setup man. I'm a one setup man. That's what I am. One setup. I focus on only one thing. Only one thing. Even if during my mentoring sessions, I always go through, the strategies that my mentees have, been using. The ones that made money for them, the ones that didn't make money for them. Even if I'm working on these strategies and I'm beginning to see, that the strategies are looking good, I will not use it. I won't use it until I have seen the statistics. This is important. Until I have seen the statistics and my equity curve is good. Otherwise, I will not use it. So the point here is, I'm not saying keep jumping from one strategy to another, right? That's not what I'm saying. What I'm saying is you first need to look at different approaches. Okay, so you're saying that, okay, when the market is in a range, this is a strategy that will work, right? When the market is parabolic, strong trend, right? This is the strategy. When the market is in a healthy trend, obeying support and resistance or something like that, this is the strategy I will use, right? So you must define beforehand. Now, it is later you will now come back and say, okay, this range doesn't work well for me because I usually get stopped out, right? I like parabolic. I like strong trends, and maybe some form of healthy trend. Yes. So we now say, okay, these are your A plus and these are your A. On this A plus, you give it a higher risk, and then on this one, a lesser risk. I'm teaching good, and I don't know if you people are getting some of these things, because it doesn't just happen. You can't just win. You need to look at all these things, look at their numbers, and then why do you think I trade London brick and just forget about every other noise, right? Why do you think I do that? I do that because first I'm looking at the condition. If I'm going to take setups, I have to make sure that the setup is favorable for all market condition. All market condition. What I'm saying is very simple. If I'm going to trade, let's say, I want to trade maybe supply and demand, right? I want to trade supply and demand. If the condition of the market is not favorable for me to trade supply and demand at that time, and I trade it, I will lose no matter what I do. Maybe at that time, what will be ideal for trading is maybe moving averages or divergence or maybe harmonic patterns or something else, right? So the setup is not favorable for that market condition, because in the last class, remember, I taught you that your strategy is supposed to take care of the condition of the market. It's supposed to take care of the direction of the market. It's supposed to take care of the liquidity, right, of the market, and then it's also supposed to give you an entry. That's what your strategy is supposed to do for you. Now, your setup is supposed to consider the condition to be favorable. Your setup is supposed to let you know that the market direction is up or down. Your setup is supposed to let you know that there's been liquidity and that it's time to move. Liquidity also, you can add volatility. Volatility is not liquidity, but if there is liquidity, then is usually followed by volatility. All right. So after a liquidity sweep, what you usually see is a strong movement, right? Because the market is racing to the next area for liquidity. Okay. So no, I did not say parabolic. Okay, parabolic means strong trend. When you see the market just in a strong trend. A trend can be strong like that. A trend can also be like this. It's uptrend, but you can see that it's not as strong as this first one, right? The number one is strong so number one is the one we call parabolic, right? Because it's like a rainbow. It's like something that wants to, like a rocket. Okay. So, that being said, right? Traders need to find their setup. This is super important. If you don't find your setup, the one that you trust, that you believe in, you will never make money. You will never pass any prop firm, right? If you have 2 setups, 3 setups, again, that's why a mentor is very important, right? If you have 2 setups, you have 3 setups, you show your mentor that, okay, these are my setups. This is what I look at. This is what I do. Because usually what I say is I don't impose my own style of trading on people, right? Because everybody have their own personality. So we look at your setup and look at the statisticals, the statistical edge. We look at the numbers. We look at what you can get from it and whether it is favorable or not. Then we can now come back, right, and say, okay, how can we make some adjustments for you to get a better result if we're not getting a good result? Now, that is not all the work. That is not all the work. The work now is, what is your compliance, right? What is your compliance? And then that's why the mentor is important. The mentor, you're recording these things. I told you the first thing is your playbook, right? You get the playbook. And then the second thing is your journal. Your journal. Right? The second thing is your journal. Right? The journal is where traders will now say, okay, this is how, this was my thought process before the trade. This was my thought process during the trade. This was my thought process after the trade. The playbook is for the setup and for your statistics. The journal is for review. It is the journal that will now lead you to your trading rules, which is the last thing that you need. Is after you have developed a journal. I'm telling you now, these are the things that you need to be a good trader and be a professional trader and make money consistently. These are the things that you need. It is the result you get from this review that you will now say, okay, yeah, these are the rules I need to do. I need to take only 2 trades a day. Right? I need to take only 2 trades a day. I need to take only I need to risk only 0.5. I need to risk only 1% max. I need to set and forget. I need to set and forget, because if I sit down there, I will spoil the trade by myself. If I sit down there, I will overtrade. Right? I need to set and forget. It is all these rules will now come from your journal. If you don't measure it, how can you need to measure. You need to measure it. If you don't measure it, you cannot correct it. You cannot repair it. You cannot fix it. The mindset that is the most important mindset that traders need to have to be successful is the improvement mindset. And it comes from passion. Usually you tell traders, usually traders want to be traders. At first, beginners are looking at the profit that they can make. Right? Every trader wants to be a trader. When you now tell them that you need a playbook, you need to do your statistics, you need to do your setup, you need to journal, you need to take screenshots before and after, you need to write what you are thinking before and after, you need to do this, you need to do that, then you will now see that they are not sure if they really want to be a trader again, because of the work that has to be put in. But trading pays you by your performance, your daily performance. It's your daily performance that will pay off. It's not a one-time lock. I have never seen any trader that became rich from a one-time success. You just managed to do something by luck and you won. I've not. Even gamblers. There is nobody I know of personally that has accredited his or her success to gambling. So if you come to Forex and you don't have a playbook, you don't have a journal, you don't have trading rules, you are a gambler, because you don't have an edge. It is only an edge that will make you make money. Right?
Somebody's asking if Elliott wave is applicable to this strategy. So I don't know which strategy you are talking about. Elliott wave is a strategy on its own, and it's left for you to decide on your own whether or not you want to use Elliott wave as one of your setups. Right? It's left for you. But I know Elliott wave traders, they don't do any other thing apart from Elliott wave. They are just, drawing the next wave and waiting for, possible projections. All right. So traders are looking to improve every day. Every day. It is this improvement that will take you to your $1 million. It is this improvement that will take you to your $1 million. And do you think that we get to $1 million and we stop? I'm 7-figure, but I don't want to stop here. I'm looking for 8. We're looking to scale up to $10 million and more. So for you to go from, I used to trade $100. I used to trade $50. But I scaled up and I followed the process. I got lucky sometimes. I made money and then I came back, I lost the money. Right?
So, but you have to follow the right process so that you can be profitable. If you do not follow the right process, you will never be profitable. Never, ever. You will never, ever. You will continue to remain among the so-called 95% traders that are losing. Okay? So, but I want you to know that if it's possible for one person to be successful as a trader, to win consistently, win over and over again, if it's possible for one man to do it, it is possible for another person. What is possible for one person is possible for everyone. Okay? If you don't want me to be your mentor here, go and look for mentors. There are mentors that are maybe that are free, right? As long as, of course, they are using the right method for mentoring. Okay, so but you need a mentor as a trader. I'm telling you this because is going to change your game. I tried for many years, but I wasn't profitable. I was just not profitable. Up down, up down. I wasn't profitable until I got a good mentor, and he was a 7-figure trader, right? I got a good mentor, and then the guy showed me these things. I didn't like it because it would take time. It would take time. It would take you months. You need a setup, and then you backtest the setup. You will backtest and backtest until your back will start to pain you. You have back pain. But it's for your own good. At the end of the day, you become profitable. There is no... Okay, let me show you something with the London strategy, because somebody asked a question about that. Amen. Now let us look at what the London strategy will usually do for you, right? Now this is very important, guys. This is very important. Now let us assume that you already have a good setup. Let's assume you have a good setup. Okay. You have this setup is your favorite. It's your best, your absolute best. Okay. Now, let's use let's use the liquidity sweep, for example. Now, from the information I have given you, right, you want to ask yourself, what is the win rate? Now, a lot of people will lie to you, and I'm telling you, lie to you that their win rate is 80%, 90%. Bro, it's a lie. It's a lie. Go back and look at what they are doing and see how many losses that they are taking. It's not. You can't have a win rate of 80% in a market that is always looking like a buy and a sell at every moment in time. It's impossible. Impossible. I'm telling you, take it anywhere. You can't have a win rate of 80%. I will sell my granny for a 60% system. I'm telling you fact. I will sell my granny, my grandmother, I will sell her to purchase a 60% system. All those people who tell you it's 80%, it's 100%, it's 95%, it's a lie. Open the chart and try to buy. For that reason you want to buy may be valid. But I will look at that chart, or another trader will look at that chart and give you another reason why it is a sell at that moment. Even if the market is racing up and they see one candle, opposite candle like this, you know what they will do? They will begin to sell. It's going up, everybody's seeing is a buy. What would they do? They'll begin to sell. Why? Because that's the way the market behaves. The market, if everybody is buying, who is going to make money? Whose money are they going to take? Whose money are they going to take? They have to make some people think that the market, the market will print strong black bars for you so that you will leave. Then it will continue. The market always makes you feel like it wants to sell and always makes you feel like it is just buying. And when you think that you're buying, is already making you feel that it is a reversal. And you're seeing change of structure. You're seeing everything that makes you think that the market is about to reverse. So why I'm saying this is I need you to face the market with reality. Reality. When I say reality, just follow everything realistically. Don't let anybody out there deceive you. Now, the fact that I said that win rate cannot be this high doesn't mean that it is impossible. Okay, it doesn't mean that it is impossible. I can adjust my stop loss and my target. So if this is my stop loss, this is my entry, and this is my target, I'm going to have a good win rate. Right? I can have a good win rate because my stop loss is far. Right? I have a wide stop loss. But the problem is, on the days when I lose, you see this my small target. If I'm making small money from all the plenty win rate, the day I'm going to lose, I'm going to give away more than half of my profit on only one loss. So what is more important than win rate is let us assume that actually on paper the London the liquidity sweep and break is above 50%, is above 50%, but under 60%. So but I will assume it is 50%. Okay, and now the question is, can traders make money with a 50% system? The answer is yes. Right? Can you make money with a 50% system? Of course you can. Right? How? You can make money because of your risk to reward. If I have a 50% system, right? Let me show you here. If I have a 50% system and my risk to reward is 1:2, as is the case with the liquidity sweep for our London breakout strategy, right? How many trades can you find in a month? So many, actually. So many. Because it's almost there every morning. So the number of trades within 1 month, I would say, is 15. But you're allowed to take as many as 3 in a day. So that makes it 45. Right? That makes it 45. Now, what is your risk? What is your risk in percentage? Okay, what is your risk? It is either 0.5 per trade or 1% per trade. Now, with this number, you can know whether or not you are going to pass your prop firm. You can know whether or not you're going to pass your prop firm. Now, let me go further here. If I have a 50-50 system, right? I have a 50-50 system. 50-50. My risk to reward is 1:2. Now, if I want to know how much percentage I'm going to make by the end of the month, let's assume that I'm risking 1% per trade. If I'm risking 1% per trade on the liquidity sweep strategy, 1% times 45, let's just say 22, right? That's half of 45, since it's a 50-50 system. And then this is my risk. Then my gain is 2% times another 22, because it's a 50-50 system. Now, I know that I wrote 45, just so that you don't get confused. I'm going to change this to 44. So, but how I came about 45 is, this is the number of trades that you can get in a month. The number of trades you can get in a month. And I did that math by saying, if we have 20 trading days, right, you will find this setup in at least 15 days. And when you find this setup in 15 days, you find that you can take them in at least 3 pairs, right? Usually about 3 pairs. So if you take 15 times 3, you have 45. So, but for the sake of the math, I'm using 44. So half. Hello? Okay. I thought I was disconnected. So half would give me 22%. And then half here will give me 44%. This is 1% times this. And then the difference between this, you can see that the difference here is 22% gain in a month. In a month. In a month, you have 22% profit. In a month. Now, this is what it is on paper. Now, as a trader, the other day I was talking to someone, the day we did the live trade, right? The day we did the live trade, you know, I was talking to the guy, and then he said that he took a loss from the USD card, and he closed his Euro card. And I told him that you can't close your Euro card when the rule did not tell you to close it. You took a hit on USD card. Everybody took a hit. I even had to screenshot my MT4, and I showed him that I also took a hit on that 1% on USD card. But my Euro card won, and I think I shared it with the community, how I managed the trade throughout that day. Right? It won. And because I took profits on Euro card, it made up for the loss on USD card. So TP in one place makes up for SL in another place. Now, he took a hit of $150 on USD card. Then I saw his Euro card. He made $38. Now, why did you make $38? He said he closed it by himself. I said, why did you close it by yourself? He said he thought it was going to lose. So this brings me to the topic of compliance. The strategy on paper says I can give you a profit of 22% if you follow everything you have. If you follow the signal as it should be, I can give you guaranteed 22%. But because the trader is not complying to the strategy, it drops this 22% to 5%, 10%, 15%, sometimes minus 10%, sometimes even minus 100%, and then you blow your account. Right? So this is a factor that, and then that's why I keep re-emphasizing that all traders should have a coach. If you're serious about trading, except you're not serious about it, you're just doing it as something you see everyone doing, you just want to. If you're serious about doing, get a coach so that he will follow you through the process of becoming a consistently profitable trader. And I'm not saying this because I want you to make me your mentor. I usually have max, right? There's a maximum to the number of people I can take at every time, right? Because I'm having mentoring session with them, right? So I can't have everybody at the same time. Okay. So get a mentor. Look for someone who is doing well. That is a mentor. And I've told you guys, teachers are not mentors. You can be a teacher and not a mentor. A teacher can tell you this is the strategy, this is liquidity sweep, this is break of structure, this is SMC, this is ICT, this is price action, this is support and resistance. He's a teacher. A mentor is the person who's going to help you to become profitable. They are not the same thing. Take note of that. It's very important. Okay, so that being said, so you can see that using this setup, the liquidity sweep, you will pass any prop firm. Now, how do I usually approach it? Let me show you something interesting. See, this is how I approach it. This is how I approach it. If I'm trading a 100K account, right? If I'm trading a 100K account, I always begin with 0.5 for my first 10 trades. Okay, my first 10 trades, which is usually in the first week, right? In the first week, I'm looking for a buffer. In the first week, a buffer is this 100K. The prop firm has told you don't lose more than 8% or don't lose more than 10%, or as the case is with MFF, don't lose more than 12%. So this is the original capital, and they are telling you do not get a drawdown that is more than this amount. So I don't want to risk 1% per trade, so that if I have a losing streak, there's something we call a losing streak. If I have a losing streak, let's say I have 4 or 5 losing streak, I don't have a 5% drawdown, right? I don't have 5% drawdown. Okay, and then in your playbook, your streak of losses is also part of the things that you have to put into consideration. There's a lot there. There are so many other things, because streak is important. You have to know. Two things, right? You have to know how many. When I say streak, I mean consecutive losses. You enter one trade, you lose. Enter another trade, you lose. The next day you continue, you lose. You continue again the next day, you lose. You continue again, you lose. Meaning 5 times you lost, right? 5 consecutive. You have to measure the trades as you're taking them one by one to see the consecutive losses. Okay, how many times? If I have a 50-50 system, in a 50-50 system, it is probable on paper, that's what I mean by probable, that a 50-50 system has half, a probability of half. This means that for every 2 trades, there's a chance of having 1 loss. For every 2 trades, there's a chance of having 1 loss. It doesn't happen all the time, but that is what it is on paper. If you have a probability of 60%, it means that, of course, 60% is saying this is 60 over 100, right? We're saying here that for every 3 trades, you have a chance of taking 1 loss. For every 3 trades, you have the chance of taking 1 loss, and so on and so forth. When we get to on the day when I'll teach risk management, I'm going to give you people these numbers clearly. All right, I'm going to show you the numbers clearly, so that you will understand the math behind it. So, but what I'm trying to teach here is, this is when you take 8 losses in a row. 8 losses in a row, no matter who you are, it will affect you psychologically. It will affect you emotionally, right? It's going to affect you. How do you handle this? I'm going to treat it in the coming sessions that we'll have. Okay, I'm going to treat it in the coming sessions, right? Because this is a drawdown. What do you do when you take a drawdown? When you take a drawdown, you further reduce your risk. Further reduce it. Take it away from 0.5 to 0.25. That's what professionals do, right? So I'm going to teach you a lot. There's so much that I can't cover in this particular Q&A session. All right. So, but I'll try my best to see how much I can do. Okay, and for those of you who those of you who have been following me, I'm sure many of the things I'm saying here is making a lot of sense to you already. Right? I'm sure it's making a lot of sense. Okay, so two lose, and if you like the world is coming to an end, man. Yeah, actually, when you take two losses, you feel terrible. Okay, so this is what I was trying to say here, right? About the buffer. A buffer is, I don't want to, this is my original capital, $100,000 is my original capital. I don't want to lose my original capital. Okay, so I'll come back to buffer. I need to say something here. Now, part of the datum is the amount of the number of trades you are taking, right? The number of trades you're taking, your risks per trade, right? And the number of trades you're taking and your risks per trade within the space of 1 month. The number of trades and your risks per trade. Now, this is the point. This is the point. We said that if they tell you that your drawdown is 8%, as it is with MFFX. If they tell you that your drawdown is 8%, now look at it. If you're going to take 40 trades, okay, if you're going to take 40 trades and you're risking 1% on each trade, your potential loss is how many? Is 40%. It means that you definitely, if you have loss, the account is gone. Right? If you have loss, the account is gone. So you have to try as much as you can to minimize this number. Right? 20 is usually ideal. 20 is usually ideal, especially for a prop firm. Okay, so if your total risk per trade and the number of times your trade appear within a month, confirm those statistics so that you will know whether to reduce the number of trades or increase or reduce the number of risk, so that you can reduce your overall drawdown within the space of 1 month. This is also very important. Okay, start by looking at daily, right? What's daily loss? How do I manage it? How do I reduce it? If the prop firm says maximum loss is 4%, then you should be looking to take at least 2%, 1.5%. This will make you trade comfortably and safely, right? And then when you have your buffer, you can now scale up. Let me show you what buffer is. Okay, so back here, you have $100,000. Now, I always say start small. Okay, start small so that you can have a buffer. I told you that I take 0.5% on the first 10 trades in the first week, because if I take 0.5, it means that I'm taking 0.5 times 5 for a 50-50 system, and then 1% times 5. Of course, this is also in percentage, times 5. From here, these are my first 10 trades. If my risk to reward is if I have 2 reward for 1 risk, that means if I'm taking 0.5% as my risk, my profit should be 1%, which is 1:2, half and 1. So for my losses, if I lose 5, I'll be down 2.5%, right? I'll be down 2.5%. If I gain on 5 trades, I'll be up 5%. The difference here is plus 2.5%. It means that my account is no more 100K but it is now 102,500. This is now my account. No more 100, no more 100k. Now this 25 here, which you added by trading small at first, is called the buffer. That's what I refer to as buffer. I did not get the word from anywhere. I just know chemistry and physics. So I just feel like that's what it is. It's a buffer. And I don't know what else to call it. So I just call it a buffer. So you need to have a buffer on the 100k so that you can now start risking 1% per trade without entering into the original capital for a drawdown. Right? So that you don't start entering into the original capital for a drawdown. So that is something that will help you. Now, by the time you have taken your first 10 trades, and then you have a on paper 2%, 2.5%, 3% or more, right? Even if you have a drawdown here, let's say you have consecutive losses here, you would just have, let's say, maybe 2% loss, as opposed to doing 1 full percent. And if you have 2% loss, you reduce to 0.25 per trade. MFF doesn't give you time limit, actually. MFFX, right, doesn't give you a time limit. You can continue with the account for 1 year, 2 years, 10 years, for as long as you like, right? So, but we're just doing the maths correctly here. So you reduce your risk so that you can recover the loss. Because if you continue to risk more, because I see a lot of traders, once they have a drawdown, they will increase their lot size so that they will make up for that drawdown. This is a common problem, and this is the market's way of, or I won't call it the market, right? It's your emotion trying to fight back the market. And in so doing, there's no way that I don't think there's any way that donations have been made to the market more than this. You have a small loss, you go and increase your lot size. Then you win, you lose bigger and bigger and bigger. And the problem with that bad habit is that if you do it once and it works for you, you will do it again and do it again. Before you know it, you will cripple your entire account, because now you are trading a bigger lot size. Right? What I'm saying is very simple, guys. What I'm saying is really, really simple. Understand it. If you take a hit, if you take a loss, reduce your lot size. You have to do uncommon things to get uncommon results. If we are saying only 5% are profitable or 1% are profitable, there are people that are not doing what every other person is doing. Every other person, when they take a loss, they will increase their position so that they will cover for the loss. But this 5%, this 1% guys, they will reduce their position. When we treat risk management and trading psychology, I am going to talk about what I'm saying now, right, in details, so that traders can learn from it. Okay, so I want to believe that that you have something. I want to believe that you have something from what I'm sharing so far. Let me know if you have any question you would like me to attend to. Somebody talked about the entry confirmation for London strategy. I'm going to recommend the video. Go back and watch the video, right? Go back. Or if I have the time, this is something I would like to do. I would go over the strategy without teaching someone, so that I am reading a script of what I should say and do, so that it is more concise to maybe 10 minutes, 5 minutes, 15 minutes, or 20 minutes. I know they are long, but you have to put in whatever you have. You have to make your sacrifices too, right? You have to make your sacrifices. It's not my wish to allow the videos to go long, but you can see that I'm not playing. I'm giving you very important information. Okay, and then we're not, you go to take any professional course or degree, you spend years. I'm talking 6 years, 5 years. Lawyers, doctors, teachers, 5 years. The regular degree we have 4 years for you to be a graduate, and that's not all. You still go for service, and then you spend all these days, months, weeks, years for a simple degree that does not guarantee your emancipation. All right, so if we say watch a video of 1 hour, you should be able to watch it. Right, you should be able to watch it. I don't think there's any video on my channel that doesn't add value to you as a trader. I don't think, right? Even if I'm treating the same topic again, I would hardly, it would look like it's a new video entirely, because I would hardly repeat, the same thing the same way, right? You have a revelation every time. So try as much as you can to go over those things, go over those materials, go over those content. Burn your midnight candles. That's how to get better. Okay. All right. For the entry confirmation, I don't think I want to go over that thing again, because I already have a video on that thing, and I don't wish to make this video any longer than I perceive it already is. So this is your Asia session, right? First, we have Tokyo. After Tokyo, we have the actual Asia session. Okay. Tokyo will give you Tokyo low and Tokyo high, right? Somewhere you see Tokyo low, Tokyo high, right? That's Tokyo also has Sydney in it, right? So Tokyo has Sydney in it. Sydney is Australia, because Australia's Monday morning begins by WAT's Sunday night. That's why the chart opens on Sunday night. So if you look at your chart by 10, 11, if you're in Nigeria, for example, if you're in London, if you're in Nigeria, by 9, 10, by 10, 11, if you're in London or in Nigeria, by 10 or 11, your charts will open. The reason why your chart is opening is because the banks in Australia are awake. Australia is about 12 hours ahead of every other person in the world. I'm guessing they will see Jesus before everybody. So I have friends in Australia. They will tell me when Jesus comes, so that before daybreak here, I will make sure I've straightened all my ways. Yeah, all right. So what we're saying here is, after the Asia, you have Frankfurt Open. You have Frankfurt Open. After Frankfurt Open, you have London Open. This is the one we want to capitalize on, because we know that it comes with volatility. And then what we are saying is simple. If this is the range, we are expecting that the market will come here and then take all the people who have placed their entry here, stop loss here, right? People who want to sell, it will also trigger their entry to sell. People who have bought and are hoping that the buy will continue, it will trigger their stop losses as well, before it will now begin to move. This is what we said. And then the only thing is, here we need to see the reversal candle patterns, the pin bar, right? You need to see the pin bar. You need to see the indecision bar followed by a trend bar. You need to see the engulfing bar. These are the 3 signal bars that I told you that are credible. But you don't just see these bars and then you just buy. You have to wait for an inside bar to fail. You have to wait for an inside bar to fail. So once an inside bar fails, right? Once there's an inside bar, if I find an inside bar here, I put my order above this point, my stop loss below, and then I aim for 1:2. Put the stop loss here. Now, if I don't get the inside bar, people who trade ICT, they will tell you that they want to see something like this on the lower time frame, like 1 minute, right? Sorry. They want to see something like this, the market coming down, right? They call it break of structure. This candle pattern I'm giving you here is the same thing as break of structure. This candle pattern here, this one, they are all break of structure. Because if this, I told you that this candle has to be small. If this candle is small, it means that it is a pullback in the lower time frame. And then the next candle will take you into the trade. This and this are the same. They are the same. If I have an engulfing bar, market was black and then became green, and I have a small black bar after the engulfing bar that is now triggered, I have another block. That's what it is. It's an order block. So what we are looking at here is these candle patterns that I've given to you. You want to see them here so that you can join and then buy, and then divide your trade into two, 70-30. Close one at 1:2. Allow the other one to continue. Look at EU and GU today. What we had there was breakout. What we had on EU and GU today was breakout. We did not have liquidity sweep. That is obvious. There was liquidity sweep, but the liquidity sweep is not the same as it's not on the Asian low. It came. Okay, let me show you real quick. This is the Asian session. This is the Asian session for today. From here to here is the Asian session. Now, was there liquidity sweep here? Look at the opening. This is the low of the day. This from here, you can see the gap. From here, this is the low. Market opened, continued, and then continued up. From here to this point, somewhere around here is 7 o'clock, right? Now, somebody shared with me and said, "Is he going to sell?" You cannot sell because dollar is weak. You can't sell dollar. This is just a deception. I told you that the London will go the wrong way before it goes the right way. When it's going the wrong way, it's taking away all the stops that are here. All these people that bought here and bought here. See big buying candles. The market has to deceive you to make you feel that it's going a particular way. They need to go the other way and take your stops. Stops that are here, stopped out. Stops here, stopped out. Stops here, stopped out. That's the liquidity sweep I'm talking about in the London session. Now, do you buy here? No, because this is not happening beyond the Asian range, according to our strategy. I mean, it looks clean here, but on another day, there could have been another one again, another one, right? It could have continued. So, but since we are not getting it here, now it's already time. This is already, I think, around like 8, 9, right? So what do you see here? This is your breakout bar. There are two setups: liquidity sweep and breakout. Today's own was a breakout. Here, this is your Marubuzu. Oh my God, I'm so sorry. I think my image was covering it. This candle here is your breakout bar, right? This is your breakout bar. Sorry, this one. Okay, see, this is the line, right? This is the line. This would have been your breakout if the market closed above. But you can see there is no breakout here. And then you can see what happened. So if you had waited, the market came back here, broke out. Now, immediately, you see the body of the candle above the line for the Asian high. This is your inside bar. This is your inside bar. These two inside bars are not even as big as the candle, right? So this is your inside bar. Now you put your entry here, and then you can see you would have been taken into the trade by either this bar or this bar. Stop loss here or here. And then the rest is history. The rest is history, right? So what I've showed you here in this particular one is liquidity. This is breakout. Okay, so I told you the setup can be either the liquidity sweep or the breakout. Okay, setup can either be liquidity sweep or breakout. Okay, so look at this one. This is liquidity sweep, right? Even though it's not as clean as it should be, but you can see the market came down here, came down, took all the liquidity that has been happening here before going, right? This is a typical liquidity sweep for a sell. This one here, typical liquidity sweep for a sell here, right? Typical liquidity sweep for a sell. Let me zoom in. Now this is Asian low, Asian high. Okay, this is the Asian range, Asian low, Asian high. Now what do you see? The market goes down, right? Goes up, okay, and make them think that, of course, these guys are selling at this point. And then at this point, the market is going to the line. See the line here. Market is going to the line. And then it makes them think that, is going to, of course, it made them think that it's going to sell from these black bars, right? So they are selling here with their stops here. Then what do you see? It's a liquidity sweep. And then what do you need to see here? Very simply, indecision bar followed by a trend bar, or you use this as your pin bar. If you call this your pin bar, this is your inside bar. These are your inside bars. Entry here, stop loss 2-3 pips above, and then look at 1:2 guaranteed here, and then you can still trail if you like on your smaller position. So this is your entry. This, what you have here, is your entry. You can either use a pin bar, or if you don't find a pin bar, a small bodied candle, an indecision bar, a spinning top, followed by a trend bar. That is a marubuzu, a full-fleshed candle, a full-bodied candle. This here is the market tried to go up. It didn't go up. Now this is a sensitive area. This indecision means that they were fighting. They were fighting here for some time. Now this black bar shows you that after the indecision, after the struggle, this is a trading range bar. These two bars. After the struggle, this is where the market broke out to. This is the direction that was chosen. Once you see an indecision bar in an area of sensitivity, after the indecision bar, the next bar will tell you who is ready to go. After the indecision bar, if we had seen a white bar that broke out of this area, you will know that that white bar is telling you that the buyers won after the fight. So that being said, of course, from here, you take your entry here. You have this white small, see this small white bar, small white bar here. That's your inside bar, right? That's your inside bar. Okay. After the inside bar, then entry here, stops somewhere above here, and then for target. Of course, this is your inside bar, this one. So your entry would have been somewhere here. Your stop loss would have been somewhere here, of course, somewhere here. And then you go for 1:2. And then, like I said, you can find this almost every day. Almost every day. I don't think there's any day where across all the pairs, you won't find a liquidity sweep or a breakout of Asian range, because except if it's a day when the Asian range is really high, like really big, right? When there is news release or something, and the Asian range is really really big. Away from that, you will find one of these two setups. And even if the Asian range is really really big, I mean, you will still see maybe a liquidity sweep that comes back or something, right? You must find something to trade. But I usually say that if the Asian range is too big, don't take don't take a breakout that day, because the assumption is that if a market has the ability to travel 50 or let's say it has the ability to travel 100 pips on the average, right? And before you wake up, it has already traveled 85, 90, 78, right? Is the chances of going another 75, 78 is not there. So you have to be careful with trading a breakout after that kind of move from the Asian range.
Okay. So I'm going to end the class here, unless I'm going to end the class here unless I see something that you want me to talk about. Okay, if you have something you want me to talk about, let me know. I know why you are laughing. If you have something you want me to talk about, let me know. Otherwise, I will close the session here. Okay, somebody's saying fundamental analysis and how to prepare market strength, the Excel sheet of pairs. Okay. So this is my Excel sheet. I prepared it by myself. Okay, this is my Excel sheet. Right? I have all this information. These are the numbers I'm looking at. This is where I took the last one I gave you from. Okay, so I have a copy on my phone. I have on my computer. Okay, so what happens here is very simple. You just I go to the pair. I look at the structure, then I assign a number. If the structure says sellers are in control, I will give the person who is selling +1, and the person who is being sold, that meaning the person who is being sold is weak, so I'll give him -1, right? So that's how I will take. If both of them are neutral, the market structure is not suggesting buy or sell, I will give 0, 0. That's how I will assign it to all of them. Then these numbers are calculated here, and I have my overview where I come to see what what it looks like, just a visual representation. But I can see from here the total numbers. I can see the numbers from here, right? I can see the numbers already. So that one is just a visual aid, right? So I would do another class where I would teach you how this is done, okay, properly, how it can be done. All right. I just watch out for my series, okay, for my sessions, right? Try as much as you can to follow with most of my sessions, because I'm sure that you get good value. All right, so yes, I use a buy stop above the signal bar. All right, for this particular strategy, I use a buy stop above the signal bar. Okay, I use a buy stop. Someone's asking if I use a buy stop and sell stop. I use a buy stop. I'm not a fan of limit entries. I'm not. Instead of using limits, I will use
instead of using limit, I have an app on my phone that is called call is called call levels, right? This app, I don't know if you guys can see, but there's an app. You see that there's an app here that is written call levels. So I use the app to set the alarm, right? I use it to set the alarm that tells me that my limit entry is supposed to be triggered, right? So it tells me that my limit entry is supposed to be triggered. So instead of uh, fundamental analysis briefly, okay, yeah. So I use alarm, and then when I use the alarm, I immediately go to the smallest possible time frame. It could be M1, it could be M3, it could be maybe any small time frame to look for a signal bar. Then I will buy above the signal bar, right? So there's something I call signal bars. I have to see a signal bar before I buy because of the first person that taught me. Okay, so I must see a signal bar because it is only a signal bar that gives you the signal that those people that you hope that you want to buy from, or that you hope that are in control, or that you hope that are going to go or move, it is their signal bar that will tell you that they are ready to go or they are present. So if I don't see a signal bar, I won't take the trade, even if it means going to 30 seconds. I must see a signal bar there before I execute. If I don't see a signal bar, I will not take it, right? Because yeah, limit orders are good, but you take a lot of XLs. You will take a lot of XLs if you keep on using the limit order. And then my buy stops have averted a lot of limit orders for me. So the fundamental analysis is a full topic on its own. There's no way I can say anything briefly about fundamental analysis, except you're just asking me to define fundamental analysis for you, right? So I will. I'm taking note of that. I will include that as one of the things I'm going to teach on one of the days, right? So that you see what you can get. One pair or multiple pairs, advantages or disadvantages. Oh my god, this is like a full chapter. It's a complete full chapter. uh uh Advantage of multiple pairs is that you can trade one setup. See, don't take multiple pairs unless you have backtested the pair. If you have a setup and you want to play your setup on any pair, ensure that you have backtested that pair. That's all I have to say about multi, because it is stupid to play on an unfavorable playground. That market, that pair is a playground, and there are a lot of factors that affect that price. There are underlying dynamics that control every pair. I always say that if you open a chart, look at this, just look at my screen, right? You will see that if you're not seeing the name, if you're not seeing the name of the chart, you will not be able to distinguish which particular market it is or which particular time frame. You won't be able to tell that this is 1 minute or 1 hour or H4 or is Euro USD, Euro card or whatever. You won't know. So that's why I feel like the opportunities are there. Candles are printing the same way across the pairs, but there are still some things. There is the speed, volatility. JBB pairs are fast. They are expensive, and some of them are they carry high commissions, high swap fee, high spread. So you need to know the playing ground before you take it. That's what I'm saying. But absolutely, I'm looking at multiple pairs. I'm never ever going to get to a point where I say no, I want to go and trade only one pair, because I don't think I'm going to make money. That's my own that's the way I look at it. I don't think I know that there are lots of people that trade just one pair. They say, oh, I trade only gold, or I trade only EU, or I trade only GU. It makes sense, right? I trade US 30, I trade S&P 500, I would trade you, right? I would trade you, but I'm never at any point going to tell myself that I am only going to trade only one pair. That's my point, right? There's no point where I will tell myself that I'm going to trade just a single pair and the pair is my baby, the way I see some people say it, right? It doesn't work like that. Honestly, it doesn't work like that. For me, it will never work like that, right? So it depends on how you are trading. If you prefer to trade one pair, then by all means trade one pair. Go to my Twitter page. You see the recording of a Twitter space that we had, where we talked about the one pair or multiple pair advantages, disadvantages, and all that. I don't want to extend the class because we're already 2 hours into it. So I would like to stop here now, right? So go there, look at my own contribution, look at what other traders had to say, because it was quite a very interesting, um, conversation, all around, right? So look at it and then see if you can learn some things from it. But I'm going to advise you, don't get carried away by all these unnecessary things. I've given you what is important. The important things that will make you successful is now left for you to decide. If you're doing your playbook is the place where you will decide if you want to trade one pair or multiple pairs. There's nothing advantageous about one over the other. There's nothing. It depends on your playbook. It depends on what you prefer, what works for you, what gives you the most money. It depends on where you thrive. I thrive in multiple pairs. I look at several pairs at the same time, and I look at where the condition is favorable for my setup, and I play my setup on that strategy. That's how I do it, right? I'm not going to say, I mean, if you say you are only, who did they keep other pairs for to trade? Who? Or why are they there in the first place? Right? You can't just tell yourself. So the only thing is, do your homework. Check if the playing ground is good for you to thrive. If it is, then you take it. And there's all these 28 pairs that you see here. This single setup has been back tested on all of them by me. So you can see how much work I have to put in before I can say, okay, I can do this setup on this. Will I take another setup and trade on all the other pairs? No, I won't do that. Because I need to put in the work first to know whether to use the multiple pairs or to use one single pair. Okay, so I believe yeah, I understand, and I believe that takes care of it. So if you feel that your setup, you want to use, you find your setup frequently in just one pair, and the pair has a good volatility, then you can stay there. Okay, but I am going where the money is and where the volatility is. That's what I'm doing, right? So, but those of you who trade one pair, I already said, something very important in the Twitter space yesterday. You have to know what setup you will use at a particular time, right? You have to know what setup. You cannot just tell yourself that you want to use one setup to trade, because market conditions is changing. Those people who develop algos, they are always tweaking the algo, because the market dynamics are changing. The market environment is changing. Market condition is changing. The algo that works and gives you 50% every month, 20% every month, in the next 2-3 months may give you a massive drawdown, because the market condition keeps changing. So how do you expect to use one setup and continue to thrive like that continuously? So you have to know that I'm going to need to use multiple setups so that I can thrive, or I can say, okay, this is the condition, this is the setup, right? That is important. Or you say, okay, this is the only setup I'm using, and I'm never ever going to trade until I observe that the condition is appropriate, right? So use what works for you, right? Use what works for you. And like I said, get a mentor, develop your playbook with your mentor. Your playbook will reveal yourself, it will be a mirror that will show you who you are, and that will give you your edge in the market. Your playbook will give you your edge in the market. Check all the numbers before you pick up a prop firm. Right, guys. So thank you so much for joining me today. Thank you so much. Yeah, Ifesco Plus, welcome. Thank you so much, guys, for joining me today. I really appreciate you. I appreciate your questions. I hope that you have learned, and I hope that others who are going to watch the video after now will also pick up a few things. Please do well to leave your comments as to your thoughts, what you think. Join our Telegram group. Contact me if you'd like me to be your personal mentor. That is important. I have already said that. Let me know, just a few dollars, and then I'll add you up, okay, to the WhatsApp group. And I mean, you can take the cheap one, which is for group mentorship, right? And then just do something to up your game, right? Do something to up your game. And I've told you, if you don't want me to be your mentor, if you have cheaper options that will give you the same quality, then go for it by all means. But do it. Do it. If you're saving money to buy for a prop firm, first of all, get a mentor. That is, don't bypass it. Get a mentor first. Then get your playbook first. If you don't need a mentor, go and read. If you cannot afford to get a mentor, go and buy the book. You will still have to buy the book. You still have to buy the book on Amazon and read the book and then understand it, by Michael Bellafiore, right? Because most of the things I use are from his concept of mentoring, right? So you need to get the book, study the book, and then see how you can develop your own playbook, and then see how you can, from that point, develop, work on your trading journal. The mentor is supposed to be reviewing your trading journal, so you have to be responsible for doing it for yourself. So you can see that being profitable takes time and is better when you have a mentor for it. So I'm going to leave you with that. Try as much as you can to do the right thing. That's the only way you're going to become profitable. Thank you so much once again, guys, for joining me today. I am Trader Bennie, your favorite trading mentor. I will see you in the next session. I'll let you know what the topic will be. In the group, I'll let you know what the topic will be. Do have a lovely evening and, of course, a weekend. Okay, until next time, bye for now and cheers.